Arthur, you do not like the South African consumer. Obviously, you are concerned about the state of the consumer in the country. Perhaps you just start there as to why this theme has absolutely no value for you right now.
Bronwyn, the reason why we're quite negative on these stocks at present is that they've had for the last 5 years some quite considerable tailwinds. So what they've had is SA Consumer has had the benefit of low interest rates, growth in government grants, a strong rand, and in addition to that, as long as you've had a job, you've generally had above inflation wage increases. So all of these factors have either moderated, so they're still there but they're not growing anymore, or they've changed direction, like the rand and interest rates. So these things have all gone from being tailwinds to being a potential negative. I also forgot to mention the boom in unsecured lending, which has certainly come to a stop. So all of these things are going to affect the profitability of South African consumer stocks. The other thing, the other side of the table is valuations, and these companies have all had their valuations rise considerably over the last 5 years. The ones that have already started to slow or have disappointed a bit have seen those valuations pulled back, but quite a few of them are still trading at their long-term average or well above that. So most of the consumer sector is not reflecting the negative picture that we see, and that in most cases the company executives are telling us is out there.
So you are now veering towards what you have termed self-help stocks, and let's start with that definition so that the viewer has a clearer picture of what we're talking about.
Okay, what we mean is most large companies are very dependent on the economy. If you make up a considerable part of an industry, it's very difficult to escape a negative environment in that industry. So what one likes to see as an investor is a company that has some additional levers that they can pull, where there is something in addition to what's happening in the greater market that affects that company specifically, that they can use to grow their profits faster, and benefit their investors that way. So it's a subset of I guess a turnaround. So it's not really a company that's a complete disaster. It's a company that's doing well or reasonably well, but it's a company that's got some things that it can fix, some things that it can do better, and we like that to be quite a clear thing. It mustn't be a tentative thing where management hopes that they can fix it, but they really don't know how long it's going to take. So that's what we term a self-help story, where management can get stuck in.
Perhaps a good example would be Anglo American and the fact that Mark Cutifani has the potential to make some significant change within that group to deliver value for shareholders. Would that be a fair example?
Anglo American is definitely a good example of a self-help story. It's a very large company, it's spread out around the world, but what management has articulated to us is that there's a lot of technical work that can be done to run their mines better. So while it's a very large company and it's got lots of assets, it's got a handful of assets that really make the bulk of their profits. And they're focusing their attention on where those assets can be run better, and they've pointed out quite a few situations where those assets can be improved to produce more commodities at lower prices, and we think over the next 2 or 3 years you'll see that coming through. There's also a large project that they're involved in, which is Minas Rio, where they have it's coming to the end of its development phase, and you'd expect that project to stop spending at quite the rate that it's been spending at to actually start producing product within a relatively short period of time.
Arthur, do you think that Mark Cutifani is the right man for the job at Anglo American? In other words, can he deliver the value that shareholders are ultimately looking for?
Well, it's still early days. He hasn't been there for that long. He's only had 1 or 2 sets of results come through. So he's spelled out a plan, and he has started to execute on that plan. But I think it's early days to deliver a pronouncement. There's quite a big difference between putting together a compelling PowerPoint presentation and actually delivering from as complex an asset as a large open-cast copper mining operation.
How long do you think the market will give Cutifani specifically at Anglo American to deliver on that PowerPoint presentation, so to speak?
I think the market's already given him some credit. I think the share price of Anglo American has responded quite well recently. I think especially since their last result came out. So we've seen a good start to the year for Anglo's share price. It has pulled back a bit recently, I think, on the back of some concerns about the commodity outlook in general. But I think there's definitely a following there that believes that Anglo's is starting to definitely talk about the right things and is starting to execute properly on those. So I think they've started down that road. I don't think it's I think there is definitely some belief there.
Let's chat about Sasol. I like to call this one every South African fund manager's favourite stock. Obviously at the moment under David Constable, and there's a lot of blue sky potential with their American operation. Do you care to elaborate on where you see this one going?
Well, most of the time with Sasol, all you need to do is take a view on the Rand oil price, and that would have driven 90% of what happens with the company. With David Constable, I think you've got an outsider running the company for the first time in a long time, and what he's done is identified the fact that there's a lot of complexity in the company, a lot of simplicity that can be brought to the business, make it more efficient, and just run it in a more productive fashion. So that is a project Phoenix, I think, that they've got underway. And that they've started to put in place, and they've explained how long this will take and the kind of benefits that they expect to get out of it. So this is really about running their existing asset base in South Africa in as efficient a way as possible. The second part of the story is really about growth, and that's trying to position Sasol to benefit from the American industrial renaissance, which is all about the cheap gas that's available in America now. So by building a plant in America to take advantage of that to create chemicals, they're hoping to add an additional big earning stream or growth path for Sasol in the US. So that project is not it's not approved yet from a permitting point of view. They've got all of their applications in. They're one of the first companies in that area to apply for a plant like this, and we expect that to have answers about that, I guess, in the course of the next 6 months, at which point Sasol will then start to begin physically building the plant and putting those things together. So it's a two-part story. It's both about growth in the US and running the SA businesses more efficiently.
Telecommunications. Are you looking at Telkom with interest? Are you holding Telkom?
We do hold Telkom. It's not one of the larger investments in the portfolio. We're very interested in it. Telkom has been a perennial underperformer since it spun out its holding in Vodacom. Its investment in mobile is a big bleed on the company. They also have a new manager there, which for us is always a key catalyst to have us say, let's have another look at this business and let's see what's there. I think again this manager has spelled out very clearly what actions he can take, and he took some actions I think very shortly after taking charge of the company. For example, they wrote down the value of their fixed line assets to say to a more realistic level, to say, look, we're never going to earn a proper return on what these assets are valued at in our books. Let's write that down. Let's be more realistic. And I think that immediately focused investors' minds on the business to say, this is a new management team with a new approach. In addition
and
to
the
that,
share
the
price
deal,
responded positively to those moves.
The share price responded, absolutely. I think even before that, the company had also demonstrated that there is room for them to perform from a profit growth point of view. Tough to see how they're going to do that consistently in the long term without adding some new growth businesses, because the fixed line business is in a steady state of decline. But certainly they've started out on the right path. And the MTN deal is the kind of thing that they need to be doing. They need to be looking for new ways to run that business.
Talking about MTN, that's another holding within your portfolio, and you must be enthusiastic about the growth potential that MTN offers from an Africa perspective, or am I being too presumptuous?
No, you're quite right. I think the thing that MTN offers you is it offers you exposure to African voice. And we think there's still quite a bit of growth left in that. And there's still quite a bit of benefit to be gained from the increasing penetration of smartphones into markets like Nigeria. So we think that that's still going to be happening for a while. The deal with Telkom will also be good for MTN, and we think that they can do better in their South African business. I think that that's an area that MTN can improve, so we do like that. Interestingly enough, I saw a comment during the week that said that one of the few listed entry points that you can get into Iran is in fact MTN. Iran makes about 10% of MTN's earnings. It's currently not really valued at all, I think, in the MTN valuation because of all the sanctions. But with Iran looking increasingly like it's going to come out of the sanctions phase, MTN could be a beneficiary on that score. So that's a bit of an obscure angle on it, but it gives you an exposure to a real frontier market.
A related theme perhaps, Naspers, and we've seen some volatility in Naspers of late. Are you at all concerned about the opportunities? Are you going to stand firm, maybe use the pullback that we've seen of late to escalate your commitment into the company?
Naspers has been a difficult one for fund managers. It makes up a very large part of the SWIX, and there are very few fund managers, I think, that have got close to a full weighting in it. I think there's no question that the themes that Naspers is exposed to with internet, e-commerce, social networking, and especially in China, are exciting ones. The question is, what do you pay for it? And what has happened in the last year is that the valuation of Tencent has opened up, and you're paying more and more for that growth. So the concern there is how much should you be paying for it, and in addition to that, how much money is Naspers spending on their ventures into e-commerce outside of Tencent, and how much of a bleed is that going to be on their cash flows? And we'll see a bit more about that later on in the year. We like the idea, we like the concept. We tend not to like to.
Are you discussing Naspers on a regular basis in terms of, when the right time to get out could potentially be, or are you comfortable with the holding?
We're comfortable with our current holding in the portfolio. The main issue for us is price. What are you paying for that earnings growth? We're very conscious of the fact that what tends to happen with these growth stocks, at some point people overpay for the earnings and they start to discount too much of the future into the share prices. And given the very strong performance that Naspers has had, it's something that we can worry about at the moment, I think, quite legitimately.